Good morning and welcome to the Killik and Co market update. The main focus this week has been the latest inflation number from the US, which came in at 3%, quite a remarkable decline considering it was 9% in June 2022. Here's a 30-year chart for US inflation. You can see it's now back to a level that's within its normal range for this time period. Markets reacted very well to this latest inflation number, as it will take the pressure off the Federal Reserve to keep putting interest rates up. A consequence of this, however, is a weaker dollar. As US inflation comes down and therefore US interest rate expectations come down, holding dollars becomes relatively less attractive. Here's the dollar versus the pound over the last 5 years, and you can see the dollar strengthened significantly when the US started ramping up interest rates in 2021, but more recently, it's gone the other way. We've had a few bits of data out of China this week showing that the economy there continues to struggle. Here we've got the growth in exports shown by the pink and the growth in imports shown by the green over the last 10 years. During the last year, growth in the value of both imports and exports has turned negative. We know the Chinese economic growth rate has stalled, meaning there is less money available to spend on imports, and we know that many manufacturers are moving their supply chains away from China, which will impact exports. The fall in Chinese trade is a concern, and we also had the latest Chinese inflation data this week, which was another cause for concern. While much of the world is battling with inflation that's still too high, inflation in China has dropped to zero, which is an indicator of a lack of demand within the economy. The declining economic data coming out of China is perhaps one reason why China has recently become more willing to negotiate with the US. And finally, tech giant Microsoft has been trying to buy gaming company Activision Blizzard, and it had appeared that the deal might have been off the table after it was blocked by the UK's Competition and Markets Authority, the CMA, and the US's Federal Trade Commission, the FTC. Here we've got the share prices of Microsoft and Activision. Activision is in the pink, and you can see that jump in 2022 when the deal was first announced. You can see the drop earlier this year when investors decided it was probably off the table. This week, a judge in the US threw out the FTC's objections, and the UK CMA then backtracked on its own blocking of the deal, and you can see that Activision's share price jumped again. The FTC has said it will be appealing the judge's decision, but the share price of Activision remains up. Microsoft already owns Xbox, and the acquisition of Activision would give it a much greater foothold in the gaming market. Moving on to have a look at next week, we've got a decent number of companies reporting. We are expecting results out from Netflix, Goldman Sachs, and IBM. That's it from us. Enjoy the weekend, and we'll see you next Friday.